So, ladies and gentlemen, here we are, and we want to look at bank reconciliation. Of course, at your level, it will be very important for us to look at the main reasons. I mean, why would you have a bank statement, which in this case, for example, at the end of the month, when you go to pick or when they send you, for example, an email, the bank statement indicates how much. You have a bank statement. So we have a bank statement which indicates, for example, 1 million. And then, of course, the accountant in the office here has been maintaining a cash book. A cash book whose balance in this case is 900,000 Kenya shillings. What do you think in this case here are the major, what brings differences between this cash book and the bank statement? And yet we as accountants really, we expected to have the two entries giving us the same figures. Balance at the bank from my cash book, 900. I expected the balance at the bank here from the bank statement at the end of that month. I expected also 900, but I can see here that these figures are quite different. There are things, ladies and gentlemen, that happen well within inside the bank there that I can only get to know about them when I get a bank statement. Before I get a bank statement, I will not be able to know whether those expenses, for example, have been taken up, have been paid by my bank. Perhaps I had a standing order. Now listen to me very well, ladies and gentlemen. What we are told here, this is very important. We are told here the balance on the cash account, which should be the same as the balance in the cash book, is compared to the balance on the bank statement at a given date. However, these two balances may not agree, and there are various reasons. We have the concept of time lag between writing a check and the payment appearing on the bank statement, what we call unpresented checks. These are secrets that I'm divulging here. When I give checks to my staff and even my suppliers at RCM Online College, there are some members of staff or suppliers, you've paid them, maybe on the 21st, I pay normally my salaries on the 21st of every month. You've paid them on the 21st through checks, you've given out your checks there, but these guys will go and delay even for 2-3 months without, in this case here, presenting those checks to where? To banks. So it means that once I give out these checks out there to these suppliers, to these lecturers, what do I have to do? I will very fast, ladies and gentlemen, go to my cash book, say, I have paid Gladys, who is my lecturer, one of my lecturers around, 50,000 Kenya shillings. But Gladys has not presented that check to the bank. So automatically the bank will not have known that you have even issued a check leave. It will not know. So any unpresented checks, ladies and gentlemen, will be one of the reasons that we shall be having a disparity between the cash book and the bank statement. Now, ladies and gentlemen, from there, we have the second item. We have what we call time lag between depositing amounts into the bank account and this appearing on the bank statement, what we call unrecorded lodgements. Lodging, unrecorded lodgements. Now, ladies and gentlemen, remember, especially in those good old days, right? We have received as RCM Online College some payment in form of a check. Of course, we are a good college with controls. Whenever we get a check, what do? We rush with it, right? If possible, on the same day, we have received the check and bank it. But now the question will be, will the bank be able to credit monies from this issue of the checks account to our account immediately? No, there is some time lag, right? Nowadays, it has, of course, been shortened quite a lot, but normally it's about 24 hours. So if I've put in this check today, 24 hours in this case, ladies and gentlemen, in this case here, for example, happens to be ending on the 1st of the following month. So it means that by 31st of this month, when I'm supposed to be picking my bank statement, this money has not cleared. I lodged the check, but the bank has not yet really recorded and updated the money into my bank account. So it means that this is an unrecorded lodgement. You see, in my cash book, when I got this particular customer paying me, I updated my cash book. But at the same time, because of the time lag, the bank statement has not done that updating, right? So we have the concept of what your time lags. the concept of time lags, the concept of time lags. Very important, ladies and gentlemen. Then we have here what we call direct debits and the standing orders are not yet recorded in the cash account or cash book. Ladies and gentlemen, remember, there are those standing orders that we give. For example, I am a good finance manager. I know how to manage my finances quite a lot. Of course, I struggled. When I was a young man, I struggled with learning the art of managing my own finances. But nowadays, I'm very good. So what do? Assuming, of course, I don't get this kind of money, but assuming I'm getting like 600,000 Kenya shillings a month from my employer. When this money hits the bank account, my bank account, personal bank account, and then I withdraw all these monies, for example, at once, or even if I don't withdraw, so long as, ladies and gentlemen, this money has hit my bank account and I have this mobile bank access, chances are I don't know what happens. All the relatives across East Africa, right? I have some relatives in Uganda. It's like they smell like this person has gotten money. So this and this has happened, please. So you will end up in this case here, not even to relatives alone. The crazy things in this case here crop up. You may end up in this case here squandering that entire amount. One of the best ways of managing your finances very well, ladies and gentlemen, is to have what we call standing orders. Go and tell Stanbic, when you see my salary coming on this particular date, right? What do? Get 100,000 and pay to my circle, Mwasibu, direct. So they'll be debiting my account directly. Right? And of course, there are other direct debits where you don't have to issue a check for them to be able to do what to deduct the money. Like, for example, bank charges. There is no bank that comes to ask for your permission to take their money. So bank charges will be a very good example of what a direct debit. Now, students, listen and listen to me very well. When we talk of a cash book, if, for example, you have this amount in your company, 900,000, you see cash is an asset. And of course, from what I told you some time back, this acronym of PEARLS, if you remember, I taught you the acronym of PEARLS, where we said that purchases, expenses, and assets. Purchases, expenses, and assets, whenever they increase, we debit. Whenever they increase, we do what here? We debit. Whenever they increase, we debit. So if, for example, I'm selling Mutumba clothes, and then I procure goods for purpose of selling. So I go and get Mutumba clothes, I'm importing them. So I'll have to open a purchases account and I debit that account. If, for example, ladies and gentlemen, here we pay insurance for our vehicle. So insurance is an expense. I have to open an insurance expense account and I debit. Right? If I buy, for example, in this case here, a wheelbarrow, right? So automatically, if it's really assisting me and I know the benefit will go for more than, for example, a year, it means that this is an asset, right? Right? So I have to open, in this case here, that particular asset account and debit. The most important thing is for us to appreciate that purchases, expenses, and assets, whenever they increase, we debit. And then we have revenue, liabilities, and share capital. Revenue, liabilities, and share capital. Whenever they increase, we do the opposite. We do what we credit. Ladies and gentlemen, please listen. I have 900,000 in my company. I can't stay with that money in my office. That money will be stolen. However safe, the safe that I'm having in the company may look like. If I am keeping this kind of money here, there are people who are stronger than those safes. People will come and take this money. So then what I should do is to go and place this money at the bank. So at the bank, ladies and gentlemen, remember, from the bank's perspective, they owe me. They are liable to me. Whatever money I've given them, I can go at a very short notice. Actually, when I'm standing at the queue there and pick my money. So to them, ladies and gentlemen, I'm like who, if I could just use this, creditor. So to them, they owe me. So it's a liability on their side. And that is why all customer monies that banks have, ladies and gentlemen, of customers are normally on credit. Listen, ladies and gentlemen, if you look at your bank account today, your bank statement today, listen here. If you look at your bank statement today, you will realize that your bank statement looks like this. So we have here a bank statement. So we have here debit, credit. So this bank statement, remember. So when I take, ladies and gentlemen, as a client, when I take money to the bank, right? So we have the client, please look at this, it's mirror image. This is the client here, and of course we have our bankers. So when I have my money, for example, I've introduced capital to the business. So what I'll do, I'll come here and say, for example, debit, bank, because I've taken the money to the bank. And then I'll come and credit here, for example, the ordinary share capital with a million. But how about now from the bank's perspective? When they come here, they'll come and, for example, say, depending on the check number, you know, I have to pay them. For example, okay, I can even do a direct deposit. So then they'll come here and, for example, mention deposit. So this deposit of 1 million, the bank, where is it going to place this deposit of 1 million, which belongs to this customer? Is it on the debit side or credit side? The bank. Where will the bank place that 1 million that I've taken to them? On the debit or credit? Credit side, yes. So they'll come and say a deposit, for example, deposit by this and this. We have the dates, etc. When you make withdrawals, their liability to you reduces. So that's why you will hear that people saying your bank account is being debited. When you hear bank account being debited, your amount in the bank is reducing. When you hear that a credit has been recorded in your bank's account, automatically that means that your bank account is growing. That is why when we say that there are direct debits means that the bank took money from your account without, in this case here, for example, you issuing what here? A check. Without you issuing a check. Now listen, my good students. Please listen, my good students. Great. So I can see very good arguments there. Great. So we have here bank charges, of course, not recorded in the cash account or cash book. Then we have got errors on the cash book. Then we have got errors, of course, on the bank statement. Now, ladies and gentlemen, there is something that I would want us to appreciate here. There is something I would want us to appreciate here, very important. Once we have this, then we have understood the entire reconciliation, which now we shall be able to do it in Excel. There is something, if you understand here, then you have understood the entire bank reconciliation. If you understand this diagram, this is a diagram that I would want you now to take a screenshot. This diagram, I'll pause for a minute. Please try to take a screenshot here. I hope you are able to see there are two major things that you must always have. Whenever you talk of a bank reconciliation, you must be having a cash account. You must be having what you are calling a cash book. A cash book, bring the balance brought down. Put it there on the debit side. And then there are actually items here that you must always come and make direct adjustments in the cash book. The first one, you had issued, or rather you had received some checks from your customers. Customers at times, they give us bad checks. So if these checks bounce, what we call dishonored checks, I will come and credit to reduce my cash book. If there are any bank charges, I'll credit. If there are any standing orders that I had put in place, but of course I may have forgotten about them. Now that I've gotten, in this case here, the bank statement, I'm able to see the standing orders, or rather if I can even remember them, the standing orders, I must come and reduce standing orders here automatically from my cash book. And then of course we have the direct debits, and any errors, they have to be adjusted there. And then of course, using the totals here, you'll be able to get the balance carried down on this side, ladies and gentlemen. From there, the second thing, we have got to come and look at what we call now the bank reconciliation statement. So bank reconciliation statement, what do we have? We will start always with the balance per bank statement. What does the bank statement show as your balance? And then we normally do two things, not unless there are errors in the bank statement, two things actually. We less and presented checks, Those checks that I told you I give to my lecturers, but they have not presented for payment. So I must, in this case here, come and deduct them there. And then I will add any unrecorded lodgements. If there are any errors, if you get your bank making errors, that's not a very serious bank. Good banks should never make errors. This entry here, we should not be thinking about it a lot. And then, of course, we should be able to get what we call balance per adjusted what here cash book. And this balance that you get now here should be exactly equal to what here, the balance here. So now, ladies and gentlemen, have you been able really to take a screenshot of this photo? These are very important photos that I would even want you to go and put, you can draw it nicely and put it somewhere at your workstation, because I'm so sure most of you are dealing with these bank reconciliations every day. So I'm waiting for you guys to make a comment that, hey, you know what? We have been able to take a screenshot, and then I will be able to go to the next section. Today, I don't want to keep you guys waiting here for so long. No, that's not my agenda. No. Great. So I can see one person saying yes. Just take a screenshot. Done. Vanessa Kipsuto. Great. Done. Great. Thank you very much. Great. Why are we adding lodgements? Thank you very much. Once you understand the lodgements, a lodgement means what? A lodgement, ladies and gentlemen, normally happens when you take, in this case here, a check to your bank. Actually, when nowadays what they do, they'll not take your checks direct, right? They'll tell you, go and put that check in that box. So you may put that check in that box, and they may not even take that check and start processing it. Even on the same day, they may have a policy of processing checks that come like in a day, the following day, very early in the morning. So you see, when you received this check of yours, yourself, what do you do as an accountant in that company? You must have added that amount where in your cash book. You received a check, what do? You go to your cash book, you debit your cash book, you credit that particular your customer's account. So you have already recorded this amount. But on the other side, there is a time lag. There is a timing difference. The bank may even take 2 or 3 days to have this money that I have taken my check there. I've lodged my check with them, but they may take like 2 or 3 days here to really have this money, this money transferred to my account. So these are check that has been lodged there, but has not yet become money. So then what do you do when you get your bank statement? What do you do? Now that you know that you have got some money there, you add back. And recorded lodgements must always be added back. And presented checks that you issued yourself and they have not been presented by your suppliers of services or goods. Those checks, in this case, of course, at the end of the day, you know that they will hit your account. These people are clever. They will take these checks here before they go bad, 6 months, right? Before they become stale checks. So this money will go. So if it's unpresented checks, what do? We deduct. And of course, any unrecorded lodgement, what do? You add back. Unaccredited check, yes. So are we together? Are we together, ladies and gentlemen? Are we together? Great. And I can see the number is coming up very well, which is so nice of you because you're marketing this class. That is so nice of you. So nice of you. Great. So then you will allow me to do one question here on the board. One question on the board. Very fast. It's just a simple question. And really, even at the workplace, bank reconciliations are never what here complicated. They are simple as this thing, very simple. So like now we are told at 31st December 07, the balance on the cash account was Kenya shillings 11,820 debit. But the balance, I hope you guys are able to see this question. Are you able to see this question really? I'm waiting for your response. Are you able to see my question that I'm reading here? If you're able to see it, comment there, and then most importantly, take a screenshot. 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 So we are told here, at 31st December 07, the balance on the cash account was Kenya shillings 11,820 debit. But the balance appearing on the bank statement was Kenya shillings 15,000 credit. The reasons for the difference were as follows. Number one, bank charges of Kenya shillings 20. This is quite a bad question that I've been given. How can we have bank? Oh, it's a long, even 2007, bank charges were way high. But because it's for illustration, no worries. So you're told bank charges Kenya shillings 20. A payment of Kenya shillings 1,200 had been entered in the cash account. Cash book there as 2,100. So the cash book has an error. So you must correct the cash book there. A check for Kenya shillings 200 had been dishonored. Number four, there were unpresented checks totaling 6,500, and then number five, lodgements of 4,000 had not yet appeared on the bank statement. So note number four, if I'm the one doing this exam, I know note number four and note number five will go to the bank reconciliation statement. Note number four and note number five will go to the bank reconciliation statement. All the other notes, we are going to have them where just adjustments on the cash book. On the cash book. So there is no problem. Remember how we do it in practice. Ladies and gentlemen, how we do it in practice. This is how we do it in practice. First of all, you start with your cash book. Your cash book, you could decide in this case to pass journals, or if you're doing it manually. If you're doing it manually, always, ladies and gentlemen, use a T account. Cash book. So this is the cash book, like that. All right. So this cash book, debit, credit, right? So, ladies and gentlemen, I can see already somebody CPA there. I told you, it's a very simple thing. You can see this CPA guy, member of ISPAC, is already giving us an answer. So, as of 31st December 07, the balance on the cash account is the same as cash book, was 11,820. So, this is debit. So, we have here balance brought down. So, we have here balance brought down 11. I've forgotten the figure now. As age is catching up, we forget very fast. 11,820. 11,820. Great. Now, from there, ladies and gentlemen, we are told here the next thing is that we had some bank balance. You see, but the balance appearing on the bank statement, which will come later, was 15,000. So you can see there's a discrepancy between the two. The reasons for the difference, so this figure, I'll pick it later. The reasons for the difference were as follows. The first thing that I'm now aware of is that there were some bank charges of Kenya shillings 20. No bank charges, ladies and gentlemen, they are not here. And I know it's a cash outflow. So I need to come and now that I've gotten to know about them, I need to come and update my cash book. So we have here bank charges. So we have here bank charges of 20 bob. Bank charges of 20 bob, you adjust like that. And then, ladies and gentlemen, we got the next one. We have a payment of Kenya shillings 1,200 had been entered in the cash account as 2,100. As 2,100. So there are two ways here. You see, this is an error in the cash book. We were supposed to credit this account with the 1,200, right? Because a payment of 1,200 had been entered in the cash account as 2,100. So then what I need to do, you see, listen here. Had entered a payment wrongly, 2,100 here, right? So what am I supposed to do? First of all, there are two ways. First of all, I could come and cancel. These are fake payment. It's a bad payment. So I would want to cancel it. So to cancel it, I'll come and in this case here, debit this account with what here, 2,100, right? So this and this will disappear. And then now I know that there is a payment, a good payment of how much here, a good payment of 1,200. But now, why should I really do that? A good student will come and tell you that whenever there are discrepancies in the cash book because of an error, go ahead and give us that difference. The difference. What is the difference here? Somebody here, a payment of 1,200 has been entered in the cash account as 2,100. So first of all, give me the difference between the two. So it is 2,100 minus 1,200, isn't it? That is the error. The difference there is the error. So the error, they're telling me it's 900. So this error is an overcast. I paid more. I removed higher amounts from my cash book. So to cancel this higher amount, what do? I should come and debit here. I should come and debit. So in this case here, we have an error in the cash book. Error CB. Error CB. And the error is how much? 900. Error in the CB's cash book. Error in the cash book, 900. As pertains to what here? Payment. Particular payment. Like that. So first of all, up to there, are we together? Let's first of all agree. Are we together up to here? Are we together? Yes. Thank you very much. Now we continue. We continue very fast. We continue very fast, ladies and gentlemen. Here we are. We are saying here, a check for Kenya shillings 200 had been dishonored. Here, I don't even have to reason at all. When I'm told that there is a dishonored, a bouncing check, what I need to do with these bouncing checks, straight away, come straight away and do what here somebody, you credit the account. So in this case here, dishonored check. So we have here dishonored check of 200. Any bouncing checks, credit there. Bouncing checks, you credit. You had received some check from your client, thinking in this case that this client was wonderful. You even clap for the client for having given. No sooner he leaves the premises, the check goes. And of course, it's not honored at all. It's a bouncing check. So that means that because we had included the amount here, you need to come and cancel that amount. Great. Now from there, ladies and gentlemen, we are moving. Great. We are told here there were, and now here I know the next thing should be for me because we know not 4 and 5 are going to the bank statement. Could you kindly come here and give me the balance carried down in the cash book? Give me the balance carried down. Give me the side. Which side is heavier? Which side is heavier? Which side is heavier? Which side is it? Must be this side. So you take 11,820 plus 900. What are we getting somebody? What are we getting somebody? 12,720. So you're getting here 12,720. So this has to be 12,720. Now, if this side is heavier, it means that the balancing figure will become here. So the balancing figure, balance carried down, it will be 12,720 minus 20, 200 minus 20. It will be 12,720 minus 200 minus 20, which gives me how much? 12,500. 12,500. Ladies and gentlemen, after that, now go ahead and give us what we call a bank reconciliation statement. So a bank reconciliation statement. A bank reconciliation statement. So this bank reconciliation always start with balance. Balance as per bank statement. Balance as per bank statement. So balance as per bank statement, what do we have here as the balance as per bank statement? Balance as per bank statement, we were given a figure of 15,000. The balance appearing on the bank statement was 15,000. So in this case here, appearing on the bank statement here is 15,000. 15,000. Now, ladies and gentlemen, after that, the next thing that I'm supposed to be doing here, then I know straight away, once I have this figure, I know what I'm supposed to be thinking about. I know that I'll come here and add, any unrecorded lodgements. Any unrecorded lodgements will be added there, lodgement. Any unrecorded lodgement will be added here, and then we less any unpresented check. Any unpresented checks here. So lodgements, have they given us lodgements, ladies and gentlemen? Have they given us lodgements, ladies and gentlemen? Let's check here. So they've told us, note 5, lodgements were 4,000. Lodgements were 4,000. And then unpresented checks that I'm subtracting here from note number 4 was 6,500. 6,500 you're subtracting. So then could you kindly give me the balance as per CB, as per cash book. Balance as per cash book. Balance as per cash book. So balance, so you're taking this 15,000, you add 1,000 minus 6,500. What figure are we getting? 12,500. So are you seeing some kind of a reconciliation? Are you seeing some kind of an agreement? 12,500, 12,500, 12,500. Is that okay? Yes. Now, ladies and gentlemen, what I would want us to do is to take a short break. And in this short break, when now we come back, I'll be able to show you how do we do this reconciliation now in Excel. In Excel. So we take a break of how many minutes? Only 5. And remember our tradition, during breaks, we normally tend to exercise a lot. Those are the benefits of studying from home, right? Right? You get out there, do like how many? 10 frog jumps. When you come back, you'll be so fresh. You'll be able to understand the VLOOKUP method of doing a reconciliation. So how many minutes? Sit-ups, yes, 5 minutes. So we shall come back at 7:26. 7:26. Thank you so much. Sorry, for Excel computations are normally prefer. Great.
So are you able to hear me? Are you able to hear Mwalimu? Are you able to hear Mwalimu? Are you able to hear Mwalimu? Great. Thank you so much. Okay. Okay. So a quick recap, ladies and gentlemen. a quick recap here. So normally Excel, as I keep on telling you, Excel is a very user-friendly module software. If, for example, you are given 3 values, you're given, for example, values here like 30 or 20, doesn't matter, 24. We have here, for example, 35, whatever. This could be, for example, our stocks, maybe stocks in store 1. Then we have, of course, tab stocks in store, for example, whatever Z, doesn't matter really, right? I have my enter there. So what we have here, for example, we could be having something like 34. We have here 45. We have 78, like that. And then the first thing that I realize here, ladies and gentlemen, is that I can't read my titles here. So it means that straight away this stock in store Z, the sentence is bigger than the cell. When you realize that, as a good student of Excel, what you're supposed to do immediately as a warm-up, before I start showing you what I would want us to do today, as a warm-up, what you're supposed to do is to come and highlight the entire Excel. So to highlight the entire Excel, you could come straight away and say, Control A. Control A, or if you know how to use Excel very well, there is this particular point here at the angle. You can see like between A and 1, there is this particular at the point here at the corner. You simply come and put your cursor there, and then you click on it just once. When you click on it just once, what are you able to see? You're able to see that the entire Excel worksheet has been highlighted. And once that is done, ladies and gentlemen, you'll come straight away and tell us what year you come to, and it doesn't matter now where, column in between. So you're working with this in between. Once I have at the center of this B and C, I can see how my arrow is looking like. I can see how my arrow is looking like. Looks nice, right? So what I need to do once I'm there, I should be able to come and double click. When I double click like that, I'm able to see now everything fits very well. I've always seen students struggling in a very bad way. Mtu anakuja anasongesha kamoja, anakuja anasongesha, inakuwa international disaster, ladies and gentlemen. What if in this case here you have quite a big array of data, and then you start in this case here moving one at a time? Then in Excel, you are not a guru. You are not a smart person when it comes to what here Excel. So it will be very important for us really to master that particular concept. Very important. The other thing that I would want you guys to master from today as we progress with this, assuming now you've got these stocks in your stores, and you would want to get total there. You'd want to get the total there. What do you do to get the total there? There are very many ways you could use. So in this case here, as a quick warm-up, before I start what I wanted to do today, as a quick warm-up, to get, ladies and gentlemen, this total, I'll come and say Alt equals. So when I say Alt equals, what am I saying? This thing is able to give me the formula there, sum, and has been able to basically capture everything that I would want to sum. So I'll come and enter like that, right? Right. So when I go to my other column, two ways, I could come, ladies and gentlemen, here. I could come, ladies and gentlemen, here, and then I scroll. You know this, right? You can come here and autofill. You put it at the corner there, and then you autofill. You go straight out to the other side. And then, of course, Excel will be able to borrow the formula on this other side. So as a warm-up, before I start doing what I would want to do today, as a warm-up, I wanted you to remember that thing of Alt equals. I've always seen people doing crazy things here. This Alt equals is so important. Is there somebody who has done that practice? Is there somebody who has done that practice? Using, even if you have only 2 numbers, really, so long as you've done that practice, it will be so nice. Is there anybody who has been able to practice that? Alt equals. Alt equals. Alt equals, Alt equals, Alt equals. Is there somebody? They're not talking to me. These chats are so few. Today we have many, 170. Yes, thank you so much. Thank you so much. Again, the other thing that I would want you to appreciate here, I can see somebody called the QS. I'm quite keen. I would want to know whether you are a quantity surveyor. I would want to know whether you're a quantity surveyor. Okay, so Candy wants me to repeat. This is quite a simple thing, Candy. What you're supposed to do, once you want your totals here, when you want your total there, put your cursor in this particular cell where you'd want this total to be fitted. Once it's inside, I don't have to press equals to start to, no, I'll simply get there, say Alt equals. You hold on to the Alt. Don't leave, don't have your finger leaving the Alt. Once you hold the Alt, hold on to it permanently until you press equals. And then you enter. And then after you've done that, now there is a concept of now copying this formula across. And then I told you, once you start becoming a super user of Excel, I don't want to be seeing students who are really this thing of dragging, we are not required to use the mouse, right? Not required to use the mouse. So if I'm the one doing this, I'll come and, of course, in this case, ladies and gentlemen, take this to the other cell. This box, I would want to highlight this and other cell. How do I do it? Right? I can use my tab. You know, when you press tab, it moves one step to the right. One step to the right. So when I'm here, I've already taken this thing to the right. There is a shortcut that I showed you guys. Is there anybody who is able to remember that shortcut of being able to pick this total of a formula of which gave us 98 to the right side? Is there somebody who can remember that shortcut? It's a warm-up, remember that you're doing here. It's a warm-up, remember that you're doing here. It's a warm-up that you're doing here. Is there anybody who is able to remember that shortcut? I can't see as many comments. I can't see as many comments. I can't see as many comments. Control right. Thank you very much. It's Control R. So you ensure that your box is highlighted like that, and then you press Control and then the right R like that. This thing goes automatically. Once you do like that, especially in an interview, I'll be able to pick and say, hey, this guy must be a super user of Excel. Super user of Excel. So how glad will I be if I can get students who are telling me, hey, I've practiced or repeat. I'll be so happy. I'll be so happy. I'll be so happy. I'll be so happy to get students who are proactive, who are telling me, hey, we have done this or we have not done this. Have your own arbitrary fee. They don't have even to be 3. They can be 2. They can be 1. Of course, it can't be 1 and you're adding, right? I don't know what Abdi is doing on my. Okay. So are we together there? Are we together here? Are we together here? Done. Super. Yes. Done. Great. 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 Now, let me ask you a question. I can see Mary laughing loudly. If I want to undo, if I want to undo the overlapping columns, if I want to undo whatever I've done here, who can give me the command? Who can give me the command? Control Z. You guys are great. Control. No. Marieta Mutungu umejaribu lakini control minus iko maana yake. Undo ni control Z. Undo is control Z. So kija hapo useme tu control Z. Ukisema control Z inajitoa step kamoja nyuma. Baada ya kuja kufinya unatafuta ile kitu ati hapa juu ile vitu ya watoto ile ya kusema ati kamshale ati undo. Super Excel users don't use those things. Super Excel users will never use those things up there. Right? It's Control Z. It's Control Z. Thank you so much. Control Z, Control Z, Control Z. So that was quite a good warm-up. Good warm-up. But again, even before I disappear from this warm-up, I would want us to warm a little bit on this concept of VLOOKUP. And what I would want to do on this concept of VLOOKUP, I would want to give you guys some permission. Somebody who has got the VLOOKUP table. The VLOOKUP table. Is there somebody who can share that table with us? Is there anybody who can share that table with us? And then they show us as a warm-up that they are able to remember how the VLOOKUP is done. Somebody, I know you have that table that has got football teams. So I would want somebody in this case here very fast to share their table. Mary, trust you me, if I give you that summary, you will never become a super Excel user. A super Excel user, the warm-up points that I'm giving you here, I expect you guys to tell me like you're using them like tomorrow at your workplace. You're using them throughout. That's how you become an Excel super user. I was also not given those formulas by anybody, but now all of them, over 200. Over 200. Practice makes permanent. PMP. Uni Sharon Kendi. Thank you very much, Sharon. Sharon, now you can go ahead and address the committee.
Sharon, I'm sorry. Sharon, there's no way you'll be able to make that kind of a presentation without talking, eh? Sharon, I'm sorry. I have to allow you, first of all, I have to ask you to unmute yourself, and then I will start sharing as you talk to us. You must talk to us, Sharon.
Okay. Okay. You can hear me.
Yes, very well.
Okay. Good.
Sorry, there are students also who are asking that we need to share this table on WhatsApp. Yes, I'll be able to do that after the class. Please continue.
Okay, so let me just delete everything here first, and then because I've already done some things.
I'm getting a lot of echoes from your side. Are you having like 2 Zoom accounts in the same room?
No.
It's not a lot of echo, yes. You can even see Mary has been able to see that, hear that, Oscar. You have to mute one guy.
Maybe I use the earphones.
Try using them, we see.
Okay.
And there are students who are noting that you are using 2 gadgets. If that is the case, one gadget has to be shut down. Oh, she's using loudspeaker. Oh, okay. Close the loudspeaker. Close the loudspeaker. So, Sharon, I'm giving you 1 minute. Please organize yourself very fast. Please organize yourself very fast.